we are in a high yield environment, fine, and that is better, that is good. But investors should know that it will not last forever.
It's been a long week. August, we entered August with a lot of rain, right? So we're looking to brighten it up a bit. And we want to discuss, where to invest your income in August. There are quite a few windows, that any investor can actually put in some money before the month ends. And we have with us our favorite analyst, Idi Aja, to help us scratch that out.
Yeah.
Edika, welcome again.
Good morning.
Good to see you.
Yeah. Good morning, and good morning, everyone.
Yeah. Good morning, Toby.
Toby.
I need to look for a way to bring him back to the studio in your absence.
In my absence. Okay, so we're looking into August, and let's just go straight into it. So Idika, right, with yields rising and inflation staying high, really, and markets as well moving fast. To be honest, where exactly should one be putting his or her money right now?
In August?
Yeah, in August. Sorry, I even have some figures, right? So,
okay.
So breaking it down with Nigeria's interest rate, at 27.5%.
Yeah.
And inflation rate at 22.22%.
Okay.
It is now the best time to lock in high or, go for risk-free returns. It's two questions in one.
Yeah. That's a very good question. But first of all, let us break it down.
Okay.
The MPR rate at 27.5 means that's the rate at which banks borrow, either from CBN or from other banks. That means for borrowers, that means you will not get any loan below that rate.
Okay.
Impliedly, that means cost of funds are very, very high, still high. Then on the part of inflation, which is at 22.2, it means that in nominal terms, you have to measure whatever return you are getting against that inflation rate. So if it is below that inflation rate, that means you are getting a negative real return. But if it is above that inflation rate of 22.2, that means you are getting a positive real return. So the essence is for you to look at it, guide you, so that wherever you are putting your money, you make sure that you are getting a positive real return. That's breaking it down. Now, whether to lock in at high or risk free.
Yeah.
We have risk-free assets. Those assets that are risk-free. Especially look at the government treasury bills, look at federal government bonds. What it means that whatever happens, government must pay back. So you can invest and go to sleep. Now the other high risk, like I listened to Kyle this morning when he said that there was a erosion flood that eroded. That is a high risk. Now they have lost most of the investments there.
They have.
It's a high risk. That is high risk, and that comes with it should come with a higher return, higher than what is going to happen. Now to that your question, whether to lock in, yes, risk-free assets are giving a high yield now. I think the most recent one issued for 364 days Treasury bills, it was about 15.88%. So you see, that's what is given. So basically, any other investment you are doing outside the risk should be able to give you more than that return. So yes, for you to whether to lock in, it depends on one, your goal, your risk appetite. Now, if your goal is to maintain liquidity and safety, then you can go for federal government bond and treasury bills. But if your goal is if you have that risk appetite and your goal is to grow, then you can go for equities and alternative assets. Even like they mentioned, then you can go for other investmts.
Even high risk.
Even with high risk.
Okay. So now that you've mentioned different classes, right? So how would you advise, or rather, how much would you should a low income, average income earner actually invest in this risk-free returns, which are treasury bills.
Or any of the assets.
Yes, really. Or even any of the assets. I wanted to focus on treasury bills, but I think
like I mentioned now, if for instance there is let's say an average income earner, you understand?
Yes,
so are you sure, Kayode? I'm just using that as an example.
Kayode is my chairman. If you see the way he came in today.
So and you have you want to maintain low risk profile.
Yeah.
And you want to conserve your capital, then you can allocate between 60 and 70% to treasury bills and federal government bonds.
Of your budget, right?
Of your budget.
Okay.
So, but on the other hand, if you want to take risk, maybe you're still young, you want to grow stock, then you can go for, you can allocate maybe up to 70% of your income to equities.
Equities.
Yes.
Okay.
So it depends on your investment goal, your age, and risk appetite.
So all those should be considered before.
Yeah, sure.
And it's advisable to use 60-70% as it applies with the way.
Yes, depending on your investment
goal.
If you want security, you don't want to lose money. You want security, you want liquidity, at least treasury bills, even especially money market mutual funds can go for you. So because you can preserve your capital.
Okay. Thank you for that. And I have a follow-up question to that, right? Really. So you described an allocated based on the first leg,
that
which
means
is
for
safety focus.
For safety focus.
Yes. So but what if you are young and you want to take more risk? For long-term rewards.
Okay, which I've already mentioned. Now for if you are young and you want to take risk, you can create a portfolio that can enter towards equities and alternative assets like real estate and other ones. Now, but the point there is that you have to look at, even if we are going to equities, you have to look at equities that can give you your target return. You get the point that can give you your target return. For instance, if you are an income-oriented investor, you can target equities that pay dividends. Pay dividend because there has been a great rally right now this year. So some stocks are rallying, are increasing massively in their share. So you now look at those ones and look at their fundamentals to guide you. On which stock to take. Now, if you are like really mentioned, if you are young and you want to take position in equities, like I really mentioned, then you now look at the equities that one either you are for a growth stock investor or you are for dividend investor. So if you are a dividend investor, then you look for shares that pay dividend regularly, and a lot of them. There are quite a lot. Seplat, BUA Foods, Dangote Cement. Dangote Cement. No, Nigerian breweries has not paid them dividend for a while because of I think last year they declared profit. But we believe this year their shares have really rallied. Nigerian breweries, they declared loss last year. In Q1 they started coming up. In Q2, that's a half year, they declared profit too. So these are the things you have to check before you now put your money into any particular stock.
Right? And from your second leg, you focused on equities, really, right? So from the likes of MTN to BUA Foods, right? Okomo Oil and the likes, right? So the stocks are delivering, but are these returns really? Are they already priced in?
Okay. Yeah, that's a very good question for at least for our people for our listeners to know. Now, I think let's take MTN for example. MTN moved from 200 naira beginning of this year. I think as at close of trading yesterday, it closed at 480 naira. That should give about 140% gain.
Yes.
You can see there is you can see it has even surpassed the inflation rate. A very massive gain. And MTN now is the most capitalized stock, the most valuable stock on the exchange, even displacing Airtel, and Dangote Cement. Now, the same thing with Okumo, that's the agricultural sector, Okumo and Presco. They have done very well. Now, going to consumer goods, you have international breweries, you have Nigerian breweries, you have BUA Food, you have NASCON and so on. Now, like the question you now ask, yes, most of them are trading on premium valuation. That means the price multiples are high. Like the price to earning ratio, the price to book ratio, and the price to sales ratio. But what we have to look, it could mean that yes, it is overvalued. It could also mean that okay, investors are saying, fine, we believe that okay, right now we expect more from you. So that's why it could be the reason why they're having a high price multiples. But what you have to do as an investor is not only to look at their profits. Do you get the point? Not only to look at their profit, because most of them have declared profit. Even those that declared loss in 2024 are now coming up. With profits. Now you have to look outside that profits and look at their cash flow. So it's very simple. Pick their financial statement, go to statement of statement of cash flow. Then look at their net operating cash flow. Is it positive? If it's positive, that means there's enough cash. With that, then if you go further, you look at what we call the free cash flow. That means the operating cash flow. You deduct the capital expenditure to know the free cash flow. If it's positive, that means they will still have money they have invested in assets, and they still have money to at least cover their debts, pay dividends. So investors should not only, those companies that are evaluated should not only look out for the accounting profit, they should equally go to the segment of cash flow and look at their net operating cash flow to give them a clearer picture of how the company is doing.
And that way they can actually identify if the returns are sustainable.
Yes, if the return is sustainable. You don't have to look at only the accounting profits. You equally go to the cash flow and look at it. Then again, you can look at their ratios, interest coverage ratio, return on equity, and even liquidity ratio to actually know whether But some of them, have their rally already priced in. So that's the thing.
Okay, so overall, right, the key thing is to make returns, whether it's stocks, TV, or or the likes, right? And the main thing really is to beat your target return.
Yes,
right.
I agree with you.
Yeah. So what should be a better target return, really? From this assets class in August, focus in August.
Okay, one, it depends whether you want to have aggressive targets, that return target, or how you want to be conservative, or you want to be moderate. Now, but the most important thing, like I said, whatever target you are given, it should be able to surpass that inflation rate. Otherwise, you'll be losing wealth. So whatever return you're getting is not above 22%, it will give you negative real return, which is not good. Now, coming to price targets, like I said, it depends on whether you want to be aggressive. If you want to be aggressive, that means you have to take risk. Right? So that means you have to tilt your portfolio towards high growth assets, which will give you that high yield, like equities. Some ETF, exchange traded funds, even some mutual funds that are tied to equity and dollar fund. Those ones can give you higher return, but it comes with volatility. So that means if you are targeting a return of 35%, which is aggressive, then you have to move yourself towards those assets that can give you higher return. But note that they are equally volatile with higher risk.
Okay, so what about the opposite?
Then if you want, like I mentioned, if you want to be at least 20 to 25%, it's still okay. If you can get 25%, that means you have to move towards low risk investment like Treasury bills, Treasury bill, government bonds, even money market mutual fund. Because I know IBTC money market mutual fund at least offer between 20 to 21%.
Okay.
So even though it is slightly lower than the inflation rate, but it can still give you coverage. At least you are sure you can invest and go to sleep.
Okay, that's good. So, I mean, all in all, from what you said, August seems to not be bad if you apply yourself well.
No. It's not like we look at it 15% or 16% from Treasury really small. But when you look at the volume, if you put in money, you look at what is going to you, what is coming to you, you see that it is not small. So maybe if you invest small, but if still something, instead of maybe taking a risk you cannot afford. The most important, don't take risk you cannot afford. There are a lot of outlets, even Treasury bills. Get your broker.
Yeah.
I think there's an auction going today. So if you had known, and they are using the stop rate of last one they issued, which is I think for 1 year Treasury is about 15.88%, which is good. Even commercial papers are even offering above 22%, above the inflation rate of 22%. But that one requires at least minimum of 5 million naira before you can invest.
You can invest.
So you see, we are in a high yield environment, fine, and that is better, that is good. But investors should know that it will not last forever, because now inflation is coming down. As inflation is coming down, maybe while CBN is returning the MPR rate at 27, is to still maintain that to see the inflation can still come down, so that likely maybe they might come down after inflation has come down maybe reasonably. So it is not the highest, it might not last forever. So it's better to take a position now and utilize whatever opportunity that is available to you, instead of taking risks, maybe investing in other asset classes, alternative asset classes that you are not sure. Or maybe, yes, I agree that yes, you can do business, but you have to check very well the return is going to give you and the risk profile of that business. But you can equally put your money as if you are on average income earner. You don't need to waste your time. Just go to your broker, put your money in treasury bills, and go and sleep.
Okay. So all in all, do you see the numbers favoring investors for the rest of the month, or a drop?
Yes, because we are definitely the MPR is still going to stay at 27.5%, and they have just it's only when they are going to have the next MPC meeting that we will not know whether they are going to increase or bring it down. But right now, yes, the situation is going to stay the same, and even at stock level, that's equities, where analysts expect that yes, there are going to be more rallies. Stocks are going to continue to increase. You know, this is what you see in the stock market. It's just a calibration as for the rally you are seeing now. And even if you check it very well, even institutional investors have not even invested much in stock. So by the time they move in, you cannot see the growth. So what I'm saying is that even stock, we are still likely to see more growth from that angle. So, but the key thing is that depending on what you want, do you want an income-oriented investor? Then go for stocks that pay dividends. Then if we look at those stocks that are you think that are not performing now, then I'm buying deep. That is when the stocks are. Look at the fundamentals. The fundamentals are okay, but the stock is declining. Then you can take a position, and that is where your investment advisor or your stockbroker comes in. If you don't have the time, you don't have the chance, or you don't have the knowledge to manage it, then you can get your advisor or broker to advise, okay, this stock, based on the fundamentals are okay. But though the stock is declining, but you can take a position now.
Okay, so yeah, definitely advise you go to your broker or a registered trading platform, right?
Yeah, sure. A registered trading platform. Always find out whether the platform you are using is registered with SEC. Go to SEC website. Don't look at registered capital market operators. Click on it. You'll see all the registered market operators. So even the one maybe somewhere your friend advise you to pick one. Always fact check, go to SEC website, click on registered capital market operators. You will see
I see the list of everything.
So you can approach them, put an account, and start with it. Some of them have apps, so you can even trade with the apps. It's very simple. So you can even trade on your own.
Okay. Thank you very much for that. So, I mean, I think for everyone listening, we've literally explained, how to maneuver investing in August. So we've stressed on, high returns, high return yields,
yes,
and security, liquidity as well.
Yeah.
So
security and liquidity on one side, then high return with higher risk on one side. So it's not left for you now to take, okay, which one do I choose? But for an average investor, an average earner, so if you don't want to take risk, you want liquidity and security, at any time you want your money, you can easily go for it. Then you go for risk-free assets and mutual fund. Remember that the money market mutual fund, they invest in those treasury bills, government bonds, and commercial papers. So it has a certain level of liquidity too.
Okay.
So anytime you want to redeem your investment in money market mutual fund, you just write to them, say, okay, well, I mean you have invested, you put maybe 2 million naira. And that 2 million naira is giving you about 20 or 21% per annum. So some of them, every quarter, they will pay. They calculate what that 2 million has earned and then pay you. Now, anytime you want to redeem that 2 million naira, you just write to them, fill a form, redemption form, then they will now return the money to you. So you can see you can have access to your capital anytime you want.
Yeah. Okay.
Anytime you want. At the same time, you earn interest.
So, just for clarity's sake, and for those that didn't hear, I would like you to repeat that part again in the aspect of having direct access to your money at any time. I don't mind.
Okay, now, what I'm saying is this. We are looking at low risk investments that can give you security and liquidity.
Yes.
I'm saying, one, you can take a position in federal government bonds, especially savings bonds, that's between 1 year and 2 years. Or you can invest in treasury bills. Do you get the point?
Yeah.
Which is between 90 days and 1 year. Now, you can equally buy commercial papers, which is equally about 1 year. But the disadvantage commercial paper has for average income earner in Nigeria is that the initial entry is much, which is about 5 million naira. Now, if you don't want, you can now invest in money market mutual funds. Money market mutual funds is fund managed by professionals, so you don't need to bother yourself. And I'm saying that those money market the money market mutual fund, they invest in these asset classes I've mentioned.
Okay.
Now, if you put your money in money market mutual fund, it earns interest for you. At the end of it, maybe some of them they pay quarterly. At the end of every quarter, which means if you have like 3 million in Stanbic IBTC money market mutual fund, and they are paying you 21% per annum. Every quarter they calculate that rate and pay you. Some of them is to still be in your investment account. If you want to apply, you can apply for them to redeem it. They will not pay you that particular interest and still leave your principal. But in case you need money, you want that 2 million naira, you can easily write to them and say, redeem this. I want to redeem this 2 million naira, and you fill the redemption form. They'll credit your account, so you get your money. So the principal is intact. The only thing that fluctuates is interest accruable on that principal.
Okay. Thank you very much. Thank you very much, Itika. And so I hope we've been of help to everyone in regards to applying yourself as an investor in August. We're looking to also do this next month, just so we are abreast on how to apply ourselves every month. And it's been a good day. It's been a good session. It's kind of been a wet week so far, but we look forward to sunny days ahead. And if you want a recap and just to learn more on what we've discussed today, you can go to the Nairametrics TV YouTube page, and you can just check the playlist for Everyday Money Matters and catch up with us later on in the day. And that's it from me. Take care, everyone. Bye.